Very good afternoon and welcome to Mid Cap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vivek Iyer. Well, it's turning out to be a good session for us. So the afternoon highs are here. We have the Nifty, which is up around 65 odd points. We have the Bank Nifty, which is really powering ahead in today's trading session with a gain of around 0.7%, 58,900 or thereabout is where the Bank Nifty is at, going from strength to strength up over 400 odd points. Hi, Vivek.
Good afternoon, Ekta. Well, markets are taking the cues from the last hour of the session we saw on Friday, where we saw a significant surge. And what's doing quite well is actually the mid-cap index outperforming the benchmarks. But we have a lot lined up on the show, so let's start off with the top headlines. Mid-caps take the lead, surging higher with advances far outstripping declines. Autos and PSU banks gain the most, while metals trade soft.
Narayana Health surges on the back of its Q2 numbers. Profit rises nearly 30%, reports its highest ever revenue and profit at both India and group level.
Glenmark Pharma in focus as numbers take a hit from multiple one-offs in the second quarter. The management says it does not expect further exceptional losses and guides for margin improvement and a strong FY27 for the US business.
And Siemens surges after reporting its Q2 numbers. Revenue up 16%, while EBITDA rises 13% compared to last year. Growth driven by strong execution and smart infra.
Strong Q2 numbers and regulatory relief aids GMR Power and Urban Infra. Revenues higher by 31% on a year-on-year basis, while smart meter segment grew 57% sequentially. Meanwhile, the Supreme Court dismissed civil appeals filed by the Haryana Discom, giving regulatory relief to GMR Power.
Okay, well, it's turning out to be a good session for us. We have the Bank Nifty, like I pointed out, up around 0.7%. But we also have a lot of the Nifty stocks which are managing to gain. So Hero MotoCorp, for example, is powering ahead with a gain of around 4 odd percent. We have Bajaj Auto, which is up around 1.4%. On the downside, a couple of stocks such as Supreme Industries is down around 1.7%, along with the HDFC Life and Geo Financial. So a couple of these stocks which are under pressure. But let's start by talking about our mid-cap movers segment, where we have Sudarshan here to take us through all the mid-caps that are moving around in trade this afternoon. So over to you.
So overall market is trading higher. Nifty is near 26,000. So let's talk about some of the mid-cap names which are either buzzing in trade or reacting to some news. So we'll start with Siemens Energy, which is sharply higher. You can see stock is up almost 5% because in the latest quarter, company has reported a healthy revenue growth, and that was up almost 16% year on year. Next is Glenmark Pharma is in focus. Currently, you see the stock is down almost 1%. At one point in the opening trade was down almost 4%. Then recovered, it was in the green, then again it's back in the red. And the reason, in Q2, it was exception, but commentary was positive. Company is saying that FY27 is going to be good, especially for US business. Coming to Exide Industries, it was a weak quarter. Stock opened with a cut of almost 2%, but now you are saying stock is in the green, up almost 1%. The reason, it has one part that is solar business. In Q1, that solar business had seen a growth of 35%. In Q2, solar business had seen a decline of 5%. Now company is saying they will see a huge growth in Q3, and the decline that has seen in Q2, they will recover and they will see a sharp growth. Next is Idea Forge. It's up almost 11%, and the reason is company has bagged an order from Indian Army. Narayana Health has reported an increase in the EBITDA margin, and also there was healthy growth on revenue front. On the back of that, the stock is up almost 11%. Some of the mid-cap gainers on top of the list, you are seeing two-wheeler names, Hero MotoCorp and TVS Motor. There are certain rumors about ABS, that is anti-lock braking system implementation. We have not verified the news, but because of that, stocks might be higher. Next one is Angel One. Amongst capital market names, this stock is saying buying, up almost 4%. Grow has been saying buying and has been moving higher every day since listing. The stock has moved in only one direction, that is upside. Since the listing or from the IPO price, stock is up almost 70%. Last one is RB Infra. There was a positive commentary. Company is saying that with an increased, basically with an asset addition, they can see total revenue growth that can be higher, more than 20% in FY27. Some of the mid-cap losers, Astral and Supreme Industries, PVC player, since the time government has withdrawn the control order, the stocks have been moving lower. Gabriel India is down with healthy volumes, and last one is Jubilant Food. It's saying profit booking after a huge run that company had seen, or basically stock had seen after Q2 earnings.
Well, thank you so much, Sudarshan, for joining us and giving us a comprehensive list of all of the mid-caps that are moving around in the session. Well, we'll now slip into a short break. The management of Carraro India joins us next to discuss their Q2 numbers and the way forward. Welcome back to Mid-Cap Radar. Well, have a look at the Nifty within touching distance of the 26,000 levels, 15 points away as far as the spot prices are concerned. Just a while ago, it was just around 5 points again. That'll be a key monitorable, especially given the kind of call rating we've seen at the 26,000 levels. But moving on, Carraro India reported a mixed set of Q2 numbers. Revenue growth came in healthy, but higher raw material costs dragged margins lower. We are now joined by Balaji Gopalan, who is the Managing Director at Carraro India, to discuss on Q2 as well as the way forward. Thank you so much, Mr. Gopalan, for joining us. Well, that is going to be the key question for us. Strong revenue growth indicating strong volumes, realizations as well as cost dragged the margin performance. Last time when you joined us, you said you would be targeting an FY26 exit margins in excess of 11%. Do you stick to that target?
Yeah, hi, good morning. Thank you very much for giving this opportunity again. Yes, as you rightly said, revenues have been very encouraging. The absolute EBITDA numbers have grown, and our PAT is up by 22% compared to the previous year. Now, what does this indicate to us? It indicates that the segment in which we are present, the products that we are giving with a technology stack up, that is being accepted by the customers, final customers, and obviously because of that, the OEMs are very happy to pick up more from us. The four-wheel drive has been the key factor that has come in the domestic area where we did reasonably well. And in the exports, the teleboom handler business came into our expectations. If you remember, these are new products. These are not based on market growth, or it is not organic growth. These are new businesses captured by Carraro, and the ramp up is happening. In four-wheel drive, the problem has been that the absorption has been much faster, although it's very good for us. It is much faster ramp up than what we thought. The technology absorption, we were expecting it to be around 20%, 21%, but unconfirmed sources, we have come to know that it is crossing around 24, 25% of the total tractor industry. So this phenomenal growth that came in this quarter hit us a little bit because the raw material logistics, the supply chain, the localizations that were planned was all considering a more normal ramp up and not such a steep ramp up. So we lost out because of that, and we had to cater to the market. We had to feed the OEMs. So we did go down on our savings in terms of localizations and other actions. But we will surely recover because the future, the volumes are the most critical in an organization like ours. The fact that the technology of Carraro transmissions and axles is being accepted, that is a big relief for us. These are not structural issues that we are having with marginality. The issues are more about validations, localizations. Now we are focusing on spare parts because we have high margin over there. We are introducing special campaigns for spare parts. We have introduced 2 new service providers and 1...
Sure, Mr. Gopalan, that point is taken, but due to the paucity of time, we just want to get more questions in and more information for our viewers. So if you could just narrow down in terms of what these volumes are in terms of the guidance that you're providing the market at this point in time, because you said that's a critical component in a business such as yours. And what is the realizations going forward, considering that it was impacted this quarter because of the mix?
Yeah, see, in terms of the volumes, we are very confident on the guidance that we have given. Today, it is on the higher side. What was told realistic as 215 million euro, and an optimistic 220 million. Today we are revising it and we feel 220 itself is realistic, and we may even go further higher than that. So that is as far as the volumes are concerned. In terms of marginality, we have the next 6 months to work on these validations and look at the product mix that will come up in the next 6 months. So we are not very highly disturbed or worried about the marginality. The guidance we gave for this financial year is 11%, and we are quite sure that we will come close to it, if not 11, probably 10.8, 10.9, but the direction will be there. And as we move further, surely we'll catch up on the revenue. So, for the marginality. And next financial year, the guidance given is 12%. I think by then we will stabilize on our profitability as well and ensure that we are meeting the market expectations.
Mr. Gopalan, the other worry that the market had was the non-tractor emission norms that are now being pushed beyond FY27. Now, given the fact that the four-wheel drive or the 4WD, as you call it, hinges on this, and also given the fact that now 4WD as well as 2WD pricing is almost at par, do you see this particular story playing out as earlier anticipated, or do you feel it could be pushed out to a little later?
No, see, the emission norms have directly nothing to do with Carraro.
Right.
We are into gearbox and axle, so they don't affect us. It is an indirect benefit we will get, because when you go for the higher Euro norms, the domestic OEMs have the opportunity to access developed countries with regulations in emissions. So they get the higher market scope to penetrate. For Carraro, it could be an advantage because they'll have to pull the transmissions from us. But per se for us, that is not a very big concern. We are going steady with the kind of growth plans we have had. Just to share, 6 prototypes have been made this year. Last year, out of the prototypes made, 3 have been productionized this year. So this kind of new business, new products, new segments is what growing Carraro, and that is why we are strong. What comes as organic growth is something which will be beyond what we are now projecting. So we are quite safe as far as our growth numbers are concerned.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Carraro India. The stock is up around 2% at this point in time. Well, for the markets, it's speeding ahead. We're at the 26,000 mark, or just about a few points away from that. So just going from strength to strength currently for the Nifty at this point. And we have the Sensex, which is also speeding ahead with a gain of around 300 odd points plus. So overall, speeding ahead in terms of all of the indices at this point. The advanced decline ratio as of now just about even keel for at least on the Bombay Stock Exchange. On the National Stock Exchange, it is advancing as compared to the declines. So let's see whether that crisscross does happen in favor of the advances soon on BSE. But as of now, looking great for the markets as we speak. Take a break, be back with more. We'll get you a CNBC-TV18 exclusive conversation with CLSA's Leif Eskesen to decode their India strategy. Stay tuned. Welcome back. CLSA's chief economist Leif Eskesen believes that India's FY26 GDP growth will be at 6.9% and also expects FII flows to return to India after some more healthy correction. Our colleague Lata Venkatesh did catch up with him. Listen in to that conversation.
Yeah, so if you look at the current fiscal year we're in, we're looking at growth coming in just a hair below 7%, so 6.9% to be exact, right? So relative to the first quarter of the fiscal year, it does, you can say, imply some slowdown in growth during the remaining 3 quarters of the fiscal year. That sort of slowdown, I would say, is sort of driven essentially by 2 factors. One is because the government has to sort of rein in to some extent, you can say, spending to meet the deficit target, we think there'll be some sort of slowdown on that side, maybe sort of government-led infrastructure type investments. And then also the sort of, should we say, lagged effect of the higher tariffs that got imposed on India from the US, and also a slowdown we're seeing in global trade in the, should we say, in coming quarters as well, would be the two factors that will drive that. I guess if we start to see the effect of some of the GST reform, that could provide a bit of a lift to the consumption side of things, right? So that's why the slowdown we are looking at in the remaining of the fiscal year is not that significant. So as I said, full year fiscal at 6.9%.
Would you put an upward bias to that 6.9 because of the GST cuts and the probability of a trade deal with the US?
Yeah, certainly, I think the chances of a trade deal have gone up, right? I mean, Trump has certainly indicated as much, and the two sides are still negotiating on that front, right? So whether it happens in this calendar year or in the beginning of the next calendar year, so the last quarter of the fiscal, we'll have to see, right? But I suspect that we could move towards a deal, right, where maybe the tariff rate that's imposed on India lands at something similar to what we're seeing for other Asian economies, to say around 20% thereabouts, right? And then, of course, there'll be some give and take also in terms of purchases and opening up for certain sectors, etc. That would be part of that broader deal, sort of in similar fashion, but not quite the same as we've seen from some of the other Asian economies, right, where they've entered deals with the US.
Okay. Well, is there any, this is not really an economist's question, it's more your equity strategist question, but do you see the global view on India changing? We've seen the largest amount of foreign investment outflows from India.
Yeah.
But now, as you know, the GST cuts and the income tax cuts in India work in and earnings improve, and probably the trade deal comes in, do you see the movement of funds back into India? I mean, a lot of the rupee depends on that. That's why I'm asking.
Yeah. I mean, so I think, given our view on, should we say, U.S. equities being quite frothy, right? And should we say, a little bubbly, if you will, right? I mean, we do also see a relatively high probability of a correction in U.S. equities, and that also would imply, should we say, more of a sort of less risk appetite, more broadly speaking, globally, right? So I think it will be hard for Indian equities to sort of buck the trend in that type of environment. But if you look, should we say, beyond that potential correction, and if there's also maybe some further correction in India in the context of that as well, right? And valuations are maybe somewhat less, should we say, challenging to the extent they are now, then maybe there could be a bit more scope if we start to see the GST reform adding to the growth impulse in India, right? And if growth holds up relatively well, that there could maybe be some resumption on the other side of this of equity investors coming in, right? But I think valuations still are quite high. I think positioning domestically is still quite long in the tooth as well, right? So I think that is still something that does pose, I guess, challenges from the point of view of foreign investors in the near term, right? So maybe a healthy correction could be a good sort of starting point, right, for seeing flows coming back in.
Okay. Well, just a final word. How many rate cuts do you see from the Reserve Bank? Is it just one in December or, more?
So we currently have two, 25 basis points in each of the two following meetings, right? So we're not buying it. We're not looking for 50 basis points in December, which I think came up after the latest inflation number, right? But I think what you need to look at is, if you look at core inflation, right, in India, it's still added around the target, right? So I don't think there's necessarily a case for cutting by 50. So 25 basis points in December, and then subsequently another 25 basis points.
Well, that was a very interesting conversation with CLSA, and with the Nifty nudging the 26,000 mark once again. It's all the time we have on this edition of Midcap Radar. Finding Alpha when we return.